Hi, I'm Martha, one of the co-founders of Sarria. We are the first opportunity-led credit analysis firm in Europe. Our experienced analysts constantly scan the European high-yield market for distressed and special opportunities. Let me show you how it works. Like any opportunistic investor, we scan the market by a variety of means. We track price movements in the market to narrow down our universe. We ask our members what they find interesting, and we have our own macroeconomic thoughts that may lead us to analyzing a certain name. Our members have access to an independent and original stream of opportunistic trading and investment ideas, in-depth analysis on the biggest credit opportunities in the European market, and any surrounding materials. Let me introduce you to Wolfgang Felix, 20 years of experience in distress and special opportunities, formerly Senior Analyst and PM at Deutsche Bank, Marathon Asset Management, CQS, and Wilshire.
As fund managers, we constantly seek to optimize our credit selection process because idea generation and credit selection are key to building a strong and differentiated track record. In the process, we can typically rely on independent research, credit news services, and data providers. But they still leave our world flat and with information only. To narrow the universe down to a manageable opportunity set, we will of course rely as much as we can on our internal idea generation. But we will also be exposed to a feed of ideas from the sell side, and we may use specialist networks to gain insight into some of the fundamentals. Along this process then, it is any fund manager's task to optimally allocate his team's time to the highest quality opportunity set only, while still keeping track of any new ideas that may be coming in, as well as those he's chosen to pass on. As ex-fund managers and buy-side analysts, we at Sarria help our clients by independently analyzing Europe's biggest distressed and special opportunities in the high-yield market. Now, we may not always agree on what those biggest opportunities are, and therefore overlap may not be perfect. But where we don't overlap, our members gain access to a wider opportunity set than they otherwise could. But where we do overlap, our members can lever off of our work, we can follow opportunities together, and have a meaningful ongoing debate on that opportunity's merits as we go along. This is how our members hold a competitive advantage in idea generation and credit selection. Let me show you some analysis. Every analysis is typically fronted by a write-up that is divided in 4 sections. There'll be the cover sheet, with the company's capital structure, our investment rationale, any reasons for distress usually, a brief description, as well as some key drivers and risks to our investment thesis. That'll be followed by an in-depth discussion of the company's industry and, to an extent, its own positioning within that. And again, that'll be followed by a in-depth discussion of the company's own strengths and weaknesses, its strategies, its market position, and any opportunities and threats, as well as management. Finally, there'll be a section on the company's legal makeup, as well as the game theory as we see it unfold. Every analysis will have a model with forecasts up to 8 quarters out, leading into an annual forecasting model, which will be integrated with P&L, cash flow, and balance sheet. This model is typically driven by an individual driver that we build for every single company differently. In this case, because it's a retailer, this model is driven by divisions, and within the divisions, by like-for-like assumptions and assumptions on its real estate rollout. There are horses for courses, however, and analyses can look very different from one name to the next. This is a supplier of lottery and gaming systems, whose very elaborate legal structure, however, results in the financials of the company not remotely reflecting the economics, as they are relevant to bondholders. As a result, we've had to consolidate a new set of financials bottom up from the subsidiaries of this company, which we're rolling forward in their local currencies, as some of the more significant subsidiaries of this company are located in Argentina and Turkey. Another example of how different analyses can be has been where financials may not be reliable at all. In the case of Steinhoff, for instance, we've built one-pagers for its various subsidiaries and have them feed into an entity priority model, which is directly linked to a complete structure chart, as it is publicly known.
If you would like to learn more about Sarria, please visit www.sarria.co.uk or send us an email to info@sarria.co.uk, and we hope to hear from you soon.